So hello everyone, hope everything is going well. Our topic for today will be about unleashing fundamentals knowledge that empower your trading. So the webinar aims to cover everything you need to know about fundamental analysis, one of the two main methods of researching opportunities alongside technical analysis. So in this course, we're going to cover everything you need to know about fundamental analysis, one of the two main methods of researching opportunities alongside technical analysis. So what is fundamental analysis? 2. Fundamental analysis and fair value. 3. Important facts in fundamental analysis. So what is fundamental analysis? Fundamental analysis is a method of evaluating the market that uses multiple data sources to find an asset's fair value. Unlike technical analysis, which looks purely at the price action, it builds up a holistic picture of a security's strength and weakness. You often hear the fundamental analysis mentioned as a method of finding stocks to buy. But in truth or reality, it's used by traders in multiple different asset classes. In Forex, for example, a fundamental trader would examine any data that is likely to have a significant bearing on the price of a currency pair, such as economic data, political factors, or even the impact of natural disasters. Fundamental traders don't just look on data randomly, though. They try to assess a market's fair value, so they can see whether it's currently underpriced or overpriced. Fundamental analysis and fair value. Fundamental analysis is based on the idea that each asset has a fair value. What does fair value mean exactly? And that why the markets are temporarily overpriced and underpriced an asset, eventually its price should normalize to that fair value. So you analyze a company and decide that it's worth more than its current share price. You can buy its stock, then sell it once its price catches up to the value you have attributed to it. There are countless factors you could consider in deciding your fair value for a currency. You might look at economic releases, central bank actions, retail consumption, and more. So drawbacks of fundamental analysis. Fundamental analysis provides a great way to familiarize yourself with your chosen asset classes and sectors, and can help you find profitable opportunities. But there are two main issues you should be aware of. What are they? The first is that there is no guarantee that your chosen market will gravitate towards its fair value, even if you research it thoroughly. For one thing, an entirely unpredictable event, such as natural disaster or scandal, could wreak havoc on both your asset price and your estimate of fair value. Or the market may remain irrational in its pricing for longer than you can keep your position open. So it provides a great way of familiarizing yourself with your chosen asset. So for example, whenever you choose an asset to trade on, it's something you are more familiar to. So like for example, Apple might be an option. Any stock share company, for example, Tesla, as we can see yesterday, how it went down even. And Elon Musk blamed China production for electric cars, the reason behind Tesla moving downwards shares. So, and then in this way you can find profitable opportunities. And as we said, the two main issues that we have to always be aware of is not to guarantee that your chosen market will move towards its fair value. So it will never be the way, like for example, now I buy shares for Apple since I know that at some point they'll be releasing a new phone, for example. So I shouldn't be like, I have high hopes that if they release this new phone, this market will move uh, correspondingly with the market size. So the second is the vast amount of data at play across the global markets. With so much to consider, how do you decide what is worthwhile and what isn't? One method of overcoming this issue is to take a top-down approach. What does top-down approach mean? So start by looking at the overall economy. For example, now America, US economy is like around the same scenario of 2008. we can see that it's going through or going forward into recession due to high interest rates, and people aren't being afford to close even debts that they have. So before deciding which markets may be overvalued or undervalued, then take a look at the specific factors surrounding a handful of assets so you can take your position. So always do your study, look at specific factors, look at things that allow you or give you the right or the green light to buy this asset, and then you can take your position. So what are the important factors in fundamental analysis? As we've seen, the sources available to a fundamental trader are vast and varied, so we have many. However, there are a few that are more important than others, so we have to look at the few that might help us in looking forward. So central bank announcement. For example, central banks can be a cause of significant volatility across most asset classes. Their most important action is to raise or lower interest rate, which can give a high impact on currencies, stocks, indices, and more. So for example, in the scenario of today, the European bank kept the interest rate the same. For example, Turkey, they increased by around 5%, I think it reached to 45% interest rate, which is a very huge number. And for the US, we'll be waiting for the interest rate next week. So this is what they mean when they talk about the central bank announcement and how they are working with interest rate, whether increasing or decreasing interest rate. However, fundamental analysts will also watch for new monetary policy, hence that a central bank's stance may change in the near future. Asset purchases, currency revaluations, changes to personnel, and so on. So moving on to economic data. Economic data, almost every asset is affected by its wider economy. So fundamental traders will look for signs that an economy is growing or shrinking. The key factor or key indicator of economic growth is gross domestic product, GDP, which calculates the sum of goods and services produced within an economy. So this will tell us whether the health of the economy is good, whether it's not good. It's gonna be like how do you call it, like a signal for us to know how the health of the economy is. However, employment and production reports are also important. So we have to always keep in mind also employment and production reports are to be taken into consideration. Now, moving into inflation, it's another key economic factor. And inflation occurs when the purchasing power of a given currency decreases, and central banks usually have the job of keeping it in check while avoiding deflation. Basically, what I'm talking about now is more for people who are trading within the US market. And what we can see, what's happening, how gold move up and down, and how now S&P 500, for example, is crazy up, and still waiting for the decision of the central bank. So inflation, as we said, does not just affect forex, bonds, commodity stocks, and indices will all usually experience volatility from it. Now to politics. Political change within a country can play out across financial markets. For example, now there are high hopes that President Trump might be the next president again for the US. And as we know, Trump's mentality, he never liked to increase interest rate, so he will put pressure on Jerome Powell to keep or to decrease interest rates. So for example, a new president, as we said now, might make life harder for business or invest heavily in new infrastructure. Geopolitics too can be important. For instance, increased conflict in the Middle East can put a strain on the world's oil supply, driving up its price. As a result, businesses that rely heavily on oil may see their profits weaken. So now, for example, as we can see in the Middle East, and especially in the Mediterranean Sea, what's happening regarding the war between Palestine and Israel and all around, we can see that things are messed up. We can see that the Houthis in Yemen and the Americans and the Iraqis and also the British, how they are bumping each other, and how ships are being stopped from crossing the sea from there. This will affect and put high pressure on oil supply. Lastly, natural disasters and seasonality. These two factors may seem unrelated to the markets, but will often drive volatility across multiple assets. Natural disasters can bring headwinds for businesses and economies, as well as affecting the supply chains of various commodities. Seasonal weather issues can do the same. Thank you for joining our webinar. Please scan our QR code to follow us on our social media platform, join our Telegram channel to receive more updates, daily news, and see you next week on our upcoming webinar.